Yo, what's good everybody? Welcome back to another video in the Day Trading Institution. So in this video, we're going to be pretty much just doing a recap of what we learned in the last lesson, which is going to be our strong, our weak, and our neutral candlestick patterns. Now in this video, I'm going to be using the example on the 4-hour time frame, but really this applies to all time frames because again, they're all the same concepts. Along with the actual candlestick closures, what we're going to be covering as well is momentum within these candlesticks and determining the momentum within the candlesticks. Now again, just a recap from yesterday's lesson or the last lesson we did was the momentum in the candlesticks is all determined by the size of the candlesticks themselves. So before we get into momentum, I kind of want to divide this video into two portions. The beginning of the video will kind of cover the candlestick closures, and then the end of the video will cover momentum and solely look at momentum. So one thing that I wanted to go over with you guys is kind of like a trick that you can use in the beginning as you're building that pattern recognition to actually help you determine if a candlestick is strong, neutral, or if it's weak. And again, remember, when it comes to a neutral candlestick, it's a 50-50. It's kind of like it doesn't really give us a lot of detail. But a strong and a weak candlestick does give us a lot of detail. So when it comes to us actually using this in quotations trick, right, we're pretty much going to be using the Fibonacci retracement tool, which can be found right here. And now, when measuring a bearish candlestick, you're simply going to start at the low, which again, you have your lowest close and you have your lowest low, right? So let's cover that really quick. So your lowest low is where the wick is going to end, right? And again, this is the bottom wick. That is going to be considered the lowest low. The lowest close is going to be where price closed, which is going to be right here. Right now, on a bullish candlestick, right, we're going to be considering a highest high and a highest close. So in this situation here on this bullish candlestick, the highest high is where the wick ended, and the highest close is going to be where the candlestick actually closed. There's two big differences, right? So now that we have that basic terminology out of the way, those are the parts of the actual candlesticks themselves. So I'm gonna just kind of cover it one last time, right? Maybe use a different example. Let's use this one. Let's use this example here, right? This neutral candlestick. So I'm gonna exit the replay. I'm gonna go back into the replay and look for that area. I believe it was somewhere back here. It was right here, right? So with this candlestick here, it is a bearish candlestick, yes, right? So I'm going to use this marker here. So this is going to be, this red line is going to be the lowest low, which again is going to be the bottom wick. This line right here, I'm going to make this green, is going to be the lowest close. Now this up here, I'm going to make this let's make this a blue line. That is going to be the highest high. And then I'm going to make this right here. This is going to be the open of the candlestick itself. Right, I'm just going to leave that there. Right, notice how there isn't a highest close. And that's simply because this candlestick did not close bullish, so that wasn't the highest close. Right, so in this situation here, you have your highest high, which is the highest point the wick reached. Then you have the lowest low, which is the lowest point the wick reached. Now, where the candlestick closed bearish, you have the lowest close, and then you have the open. In this situation, you don't have a highest close because the candlestick didn't close bullish. You will only have a highest close when the candlestick closes bullish, right? Now, let's get into the candlesticks themselves. So pretty much, let me kind of just get rid of all this drawing on the screen, right? When we're actually going to be measuring candlesticks with the Fibonacci retracement tool, right? Let's go in the replay mode again. let's say I want to measure this bullish candlestick to determine what candlestick is. If the candlestick is a strong candlestick, the candlestick is a neutral or a weak candlestick, right? So all I'm simply going to do is click on the Fibonacci retracement tool. I'm going to go from the highest high to the open. And as you can see, we have different levels here. We have the 0, which is where the candlestick started, which let me adjust that. We have the 38.20, we have the 50%, we have the 61.8%, and we have the 100%. So we're going to be using these percentages here to kind of make cuts within the candlestick to determine where what level the candlestick is actually trading at. If it's at a very strong closure, if it's at a neutral closure, or if it's at a weak closure. So when it comes to actually determining this, you guys can kind of already tell based off the right side of the screen. Notice how price closed in between the 618 and the 100%. We're going to be considering this to be a very strong closure. Why? Because we're determining the bullish move from the open all the way to the highest high. Now we can take into consideration the bottom wick, which we will take into consideration the bottom wick. Notice how it has a pretty large bottom wick and it still closed within the top 1/3 from the open to the highest high. Right? This kind of just adds confluence, meaning that this is already a strong closure. We closed from the open to the highest high within the top third. Now that we're incorporating how big this wick is, we can just kind of add that, hey, you know, and the candlestick left a big wick to the downside. It's a pretty strong bullish candlestick, right? But in a situation like, let's kind of section this off. So if the candlestick closes anywhere between the 618 and the 100%, then it's going to be considered a very strong candle. If it closes in between the 50% and the 38.20, it's going to be considered a pretty neutral candlestick. And if it closes in between the 0 to the 38.20, it's going to be considered a very weak candlestick, right? So let's kind of just continue to take a look at some of these examples here, right? So clearly, this candlestick here from the open to the lowest low, it closed within the bottom third from the open to the lowest low. That's going to be considered a very strong bearish candlestick. Now, let's say for candlesticks like this, we can't really tell. We're going to be using the same fib trick. But this time, since it's a bearish candlestick, we're going to be going from the lowest low to the open. You can see this candle closed in between the 50 and 38.20, which means it's going to be a neutral candlestick. Now, this one is also pretty obvious. You can see that this is a very strong bearish candlestick. Along with this one, it is a very strong bearish candlestick. But one thing I want you to notice is the wicks. So notice how these wicks aren't really passing each other, right? Meaning that the market is making lower highs, right? So the highs with these wicks are getting lower and lower, which is just something to pay attention to while you're holding a live position, right? So now we can continue. So we can all agree that these are all strong candlesticks, except for this one, right? This is a pretty weak candlestick here, pretty weak bearish candlestick, because it closed in between the 0 and the 38.20, which I just kind of got to invert this here. So notice how it closed in between the 0 and the 38.20. So that is going to be considered a pretty weak bearish candlestick. But now also keep in mind that you have this big wick to the upside. In a situation like this, right, we refer to these as doji candlesticks, meaning that it's a little bit more on the indecisive side. It can also be considered a little bit on the neutral side of things as well, right? Now what I want you guys to see and notice is this candlestick here. Notice how it's not a very big candlestick, but it is a strong candlestick because it went from, or at least it closed within the 38 or within the 50% of the actual candlestick itself, right? So if we take a quick look at it here, right, you can see that it closed a little bit within that area and it left a really small wick to the downside, meaning that it is a pretty strong candlestick there as well, right? But in this situation, this is going to be a very weak candlestick. Go from here to here, right? You could see that this is actually backwards. My apologies. I don't really use the fib tool, but I just kind of wanted to teach it to you guys so you guys can actually have a better way of understanding these candlesticks here. So now notice how this one closed above the 38.20. It's going to be considered a very weak bearish candlestick, and we have a huge wick to the downside there. Now take a look at this candlestick, for example, here, right? This one, let me just kind of highlight it here, right? Notice the huge wick to the upside and a very small wick to the downside. That is another form of a very strong bearish candlestick, right? That could be considered a pin bar to a certain degree. And notice also here that it closed within the 50%. So in a situation like this where it closes at the 50%, it could be considered neutral, but the fact that it has a big wick to the opposite direction and it's still closed bearish, again, just shows us that buyers are trying to push price higher, but sellers brought price all the way down, showing and closing, I would say, in the 50% area. So it was a pretty neutral candlestick, but it's still leaning a little bit more on the stronger side of things, right? Same thing with this one. You can see clear as day that this candlestick closed within the bottom half of the actual candle, right? From, again, the open to the lowest low, it closed within the bottom third, and it left a huge wick to the upside, meaning that buyers, again, were trying to take control, but then sellers came in and brought price down even lower. And then we can easily argue that this is going to be a really strong bullish candlestick. Why? Simple, because from the open to the highest high, which notice there's no wick, the highest high in this situation is also the highest close, right? It closed within the highest high, so the top third. So it's a strong candlestick. This one, I would consider it to be a very weak bearish or bullish candlestick, just because it looks like it closed within the bottom third here. Then again, we have a strong candlestick, and then we have another strong candlestick. So what I want you guys to do is pretty much just send, I want you guys to find at least 5 examples of each. Just go on your chart, take a screenshot like this, and I want you guys to practice, right? This is a weak, this is a weak, this is a strong, this is a strong, this is a strong, this is a weak, this is a strong, this is a strong, this is a weak, this is a strong, this is a strong. And I want you guys to practice and just be very repetitive with it until you have a whole chart like this marked off with weak and strong candlesticks. And I want you guys to practice, and if you guys want, send it in the chat so the community could review it and see if you did well or if you didn't do well, or maybe there's some areas that you could actually improve on. You could do it again on any time frame. I'm just making the example here on the 4-hour time frame. But now let's actually talk about momentum. So again, when it comes to momentum itself and looking at, let me exit this. When it comes to momentum itself and looking to see where the market could potentially run to, it all depends on momentum, right? So again, momentum is simply the speed at which the orders are coming in. And the bigger the candlesticks are, the more momentum is in the market, and the more you can actually expect the market to continue to trade lower, right? So when we actually take a look at certain areas, right, we can anticipate a reversal of a certain area because of momentum, right? So if we were to take a look at, let's just leave it at this level of resistance right here, right, which I'm pretty sure we haven't gotten into support and resistance just yet, but you guys can always come back to this video and refer to it, or we could take a look at this level of supply and demand, right? So notice again how momentum is kind of strong with this candlestick, but then it dies off right away, right? And also notice here how price picked up momentum to the bullish side, right? There's a lot of bullish momentum within this candle, but then it starts to die off after it's retested this area and momentum slowed down. Once you see momentum slow down, getting closer to a level of resistance, then you can kind of expect it to flip over and go in the opposite direction. And look how strong momentum picked up here, right? So if we could see that, hey, you know, we have super strong momentum in our favor right now, right? Where's the nearest level of support and resistance price can travel to, right? You can identify that, hey, here's a level that we have big rejections, right? And we have some indecision throughout this range here. So price is here right now, right? Look at momentum. Look how strong momentum is. You can definitely determine and make the hypothesis that price is going to continue and come all the way down to here, right? And you can see momentum is still holding up. And then here's a little bit of a pullback within the market, and nothing too crazy, but momentum is still strong. And as you can see, then it hit that level. But now, when it comes to situations like this, where you see momentum is still continuing, you can expect price to continue to trade lower. And then you have to ask yourselves again, all right, what are the next levels I could see price travel to? It's kind of like, hey, you know, we have this area here, and then we have this area down here, right? And as long as momentum holds, you should see it continue to the downside, right? So there's another pullback within the market, which again, it's normal, right? So something about momentum that I kind of forgot to cover, but is necessary that I have to cover is look how big of a sprint this was, right? This was from this point to this lowest point, a 200 pip move, right? So for the market to replicate that, which is something that we could use in the market as well, they're called equal measured moves, right? We need for price to take a break, right? You can kind of think about momentum as, again, somebody who's sprinting, right? So if they're going to measure how fast they can run from point A to point B, they're going to have to take a break after they end up hitting point B before they can go from point B to point C, right? So if we take a look at this momentum here, we can see that price went from point A, which is right up here, to point B, and now it's taking its break and headed towards, in quotations, point C. It's our jobs as traders to determine where point C will end, so then price can travel to point D, right? So if we take a look at this and we see that momentum is starting to pick back up again to the seller side of things, you definitely could enter another sell, right? Once you see momentum picking back up and you have your entry candlesticks, which we went over. Obviously, we're going to go over entry candlesticks in the next section, but this is going to be a very nice bearish variation pattern, right? And notice point C ended here and price went directly to point D, and that's how you make money when you're actually trading, right? And again, identify where this momentum is going to pick back up, because notice how strong this momentum is right here. It picked right back up and continued all the way to our other points. As you can see, it went right here. And notice, right when price hit this other level, it rejected and went in the opposite direction yet again. And then you could kind of see momentum again pick back up. But this is what I was talking about the equal measured moves. If you literally just kind of copy this move, copy and paste, you can see that the price pretty much replicates itself time and time again, right? So there you have it. Point A, point B, point C, and then it went all the way down to point D. Now, again, this is a 3-leg extension, right? And look how strong this trend is, right? Look how strong momentum is holding up. Look at the size of these candlesticks compared to the size of these candlesticks here. These are way bigger, so you can expect this trend to continue. But again, the bigger the move, the bigger the break is actually going to be within the trend, right? And then notice momentum pick right back up, almost not right away, but notice momentum pick right back up here, giving us a nice entry signal, being a bearish engulfing candlestick. And then when you see momentum start to pick back up again, because look how small this candlestick was here. Momentum is not that strong there. So that's not going to give us the best trading opportunity there, right? Momentum is not strong here at all. So it's kind of like, okay, what's the probability that, you know, we're going to see price continue going down from this area if momentum isn't present, right? Since momentum isn't present here, then it's really not that strong, right? But again, remember, the bigger the candlesticks, the more momentum there is within the candlestick. Now, let's tie in the strength of the candlestick as well. We have a pretty big candlestick, and it closed within the bottom third from the open to the lowest low. We could say that's a very nice, strong candlestick with a lot of momentum to it. You could definitely enter a sell position there, right? And again, we want to use the same targets as we were before. So in this situation, it's like, okay, where could we see price travel to next? We could see price come all the way back down to here. But the thing is, just because in the market you see something playing out and you expect something to play out, right? Just because I say my analysis is telling me that price is going to come down to here doesn't mean it will, one. And if price actually starts going in your favor, you don't know how long it will take. So we can kind of just play this and skip through, and you can see that it went right back down and is actually blowing through. Now, notice in this situation here, momentum kind of died off right after hitting the level. But in this situation, we closed under the level, and look how big this candlestick is as well. So we have a big candlestick, we have a strong candlestick, and it's closing under our level. We can expect price to continue to go down from here just based off of this candlestick. Now momentum is slowing down there. You want to see if it'll hold and if it'll pick back up, which notice again, time and time again, things repeat itself in the market. Notice how it pulled back and then continue to trade lower. And that's kind of just a basic intro to momentum. And we can kind of, just play it through here. And you can see momentum just started to pick up for the buyer's side of things. But when you're taking the trend into consideration, right, you know that you have a 1 point here, you have your point B, you have point C, which is a 3-leg extension, then you have lower high, then you have lower low, and again, price is just coming back to do another point C, unless price breaks this high here, which again, look how strong momentum still is. Right, the bearish trend is still valid. So again, it's our jobs as traders to determine where this point C is going to end, so you can look for price to form point D, which notice the big pullback here, momentum is picked back up, right? So let's say you're going to take a sell position here, right, and you're going to look for price to come all the way back down to this support here, which again, right, in situations like this here, right, a nice area to look to target would be over here again, which would be right here. Just because you don't know if momentum will slow down when it gets back to here, then you kind of just have to wait it through. But notice how I said in a few minutes ago, just because you think it'll play out in your favor doesn't mean it'll go immediately, right? Imagine the panic when you take a trade here and you see it go in the opposite direction immediately. This is where you have to put yourself in a situation where you're trading live. Imagine you see your setup, it's beautiful, amazing entry, high momentum, very strong bearish candlestick. You hit that sell button and immediately you're in drawdown, meaning you're losing money on the trade. As traders, we need to set stop losses and take profits to determine where we're going to get out if we're right and where we're going to get out if we're wrong. So in this situation, you'd want a stop loss to be above the high, right? But I'm not trying to go too in depth. I'm trying to just cover momentum here. But notice whatever momentum slow back down here. But again, you have to keep in mind the overall trend, right? The overall trend is still bearish and you have to trust the trend, right? And you have to hold your position and trust in your analysis. And then price continued to trade lower, and notice momentum pick back up here, but slowed down here, right? And then we kind of just keep playing it through. Then you can see price continue to come down. We had some indecision here, which again, momentum is going to slow down at areas of support and resistance, right? This is just another form of not market manipulation, but it's just another form of trying to take people out of trades early, right? Because remember, people are buying down here at this level. And then in this situation, it's kind of just taking out buyers and also taking out sellers at the same time, right? You want to think about areas of supply and demand, support and resistance as areas where the market's going to slow down, probably hit a wall for a little bit. And then you could see right once momentum held, bearish momentum came back in the market, broke through support. Now you can expect it to retest the next level of support there. So again, momentum is as simple as looking at the market candlesticks and how big those candlesticks are to determine whether the trend will actually continue in your direction or not and how far it will. Now keep in mind, the bigger the sprint, which this is a sprint right here, the bigger the break is going to be. The bigger sprint, the bigger the break, right? And then look, it went all the way back down, but notice how it's kind of slowing down, right? You're starting to see way more bullish candlesticks than you are here. It's not as steep, right? Notice this angle versus this angle. Look how momentum is slowly starting to slow down here, right? So that could indicate that, hey, buyers may actually come into the market again, unless we see another big break to the downside where it's very steep, right? So it's not as simple as that, but it's a lot simpler than it sounds. Because keep in mind, right, it took the market about 16 hours to make this big drop, which was, let's say, from the lowest point to the highest point to the lowest point, 250 pips, which on a standard lot size you could have made 2.5K in the span of a day and 8 hours. So it took a day and 8 hours for the market to drop to the lowest point, and it took about 3 days and 20 hours for the market to take a break before it continued to drop from the highest to the lowest point another 250 pips, where you could have made an extra 2.5K. And then this move took about 2 days, and let's just leave it at 2 days. Then this move took a whole week. It took 6 days and 8 hours before you could have potentially looked to sell, sold again. And then the initial sprint from the highest point to the lowest point was around 187 pips, which this took about 6 days and 4 hours. So you could see momentum slowing down in the trend here, right? It's not really very strong. Lots more consolidation. But anyways, hopefully you guys did enjoy this lesson, and I'll talk to everybody in the future lesson where we're going to be covering entry candlesticks.